Hey, good morning, everyone. Happy Wednesday, January 10th. Um, Sorry for the little delay here, but I'm just looking at a few things. Um, we had some interesting news yesterday out of the SEC, right? After an account on, the SEC account on X made such an announcement with Bitcoin. I'm sorry, hair in my mouth. Such an announcement with Bitcoin spiking as high as 47,900 based on some news about the approval of the spot ETF. So the only thing was that the account had been compromised and the tweet turned out to be actually fake. So confusion ensued as the SEC officials tried to get the message out to the media, and it wasn't long before that Bitcoin took a soft turn and slowed down to 45,145. You can see it's at that 45,000 level right now, hovering in that volatile trade after we spiked pretty aggressively to the upside after that rumor. So by the rumor, the truth is Bitcoin has been climbing for months now in hopes of the approval of the spot ETF, extending the gains of the cryptocurrency, which has more than doubled since the last January. The thinking here is that a simple to understand and well structured ETF can bring crypto more mainstream and in turn result in many institutional investors and retail portfolios allocating percentages to Bitcoin. So buying and reporting would be easier due to liquidity and transparency, and it can offer investors another opportunity for diversification in the products, and that would track the performance of Bitcoin as an underlying asset. So on the flip side, Bitcoin exposure has already been available for years. There are closed-ended funds like Grayscale's Bitcoin Trust, OTC GBTC, as well as ETFs that track Bitcoin futures, such as ProShares Bitcoin Strategy ETF, BITO. There are also publicly traded companies whose balance sheet are mostly made of Bitcoin, like MicroStrategy's MSTR. We got mining firms including Riot and Marathon Digital, and crypto exchanges like Coinbase, and retail traders have found additional ways to directly own Bitcoin through trustworthy custodians and often don't report profits on their own tax returns, which would be a lot harder if they own shares of the Bitcoin spot ETF. So as we're looking at this, as the volatility ensues in Bitcoin here, despite a lot of the confusion, a spot Bitcoin is expected to be approved for the first time today following last summer's court ruling involving Grayscale. Big asset managers with skin in the game include BlackRock and Fidelity Investments, but even if the product were finally cleared, it wouldn't deter the SEC's critical stance on an industry that is rife with market manipulation and misconduct, and that fake tweet that came out yesterday didn't necessarily help the cause. So the SEC chair Gary Gensler wrote on X, crypto asset securities may be marketed as new opportunities, but there are serious risks involved. And as that, we've seen that Bitcoin has been plunging since the peak of that news, and we're rotating just under that 45K level right now. There's some other news right out of Walmart. It's not just Bitcoin that we're interested in. We'll take a look at the S&P 500 futures as well as opportunity there. But we can take a glance here at Walmart. Walmart is set to make the largest drone delivery expansion by a U.S. retailer with plans to cover up to 1.8 million more households in Texas, and the expansion will include stores across more than 30 towns and municipalities in Dallas-Fort Worth Metroplex, covering up to 75% of that region. So the deliveries will be powered by by Walmart's partners, drone startup Zipline and Alphabet's Unit Wing, both of which are FAA approved to fly drones beyond visual line of sight, with nearly 4.7K stores located within 10 miles of 90% of the U.S. population. We're uniquely positioned to scale when the time comes. This was an announcement from a press statement by Walmart. As you can see, right, Walmart's not necessarily gapping up to infinity off of some of this news. We'll also take a look at the Red Sea barrage, right? Some other headlines here. Shipping rates continue to rise steeply as vessels face long delays amid increasing Red Sea attacks by Yemen's Houthi rebels. And the average shipping cost for a 40-foot container has nearly doubled since the attacks began, according to Drury's World Container Index, with 200 billion in cargo estimated to have been diverted since early December. Late on Tuesday, U.S. and U.K. forces shot down the Houthis' biggest attack yet, with Secretary of State Anthony Blinken warning of consequences if they continue. Meanwhile, the UN Security Council will vote today on a resolution demanding an immediate halt of the Houthi assaults that have impeded global commerce. So interesting news there, but all in all, that's mainly like the brunt of what I wanted to talk about. Today, in terms of news, we have wholesale inventories that come out at 10 a.m. We have EIA petroleum inventories that come out at 10:30 a.m. And then we have at 1 p.m. results of the 37 billion 10-year note auction. And then Fed Williams, to wrap up the day at 3 p.m., talks about the economic outlook. Now, if we take a look at the overall market, right, and we see what we got going on here, we're pinned between two key areas on the S&P 500, we have the top of the distribution that sits around that 48.0504 area, where a lot of volume was presented on Monday, actually, at that top before we saw some of the sell side. And, right, from yesterday's peak of the session as well as tonight's overnight session, right, we had a decent bit of volume that has been trapped up there, pushing markets lower. We also have a midpoint of a large pivot into this high 80 that's been used as a key support zone. So we're stuck in terms of the top of this distribution block, where sellers would do well to get under that high 80, buyers would do well to get above that 48.04 area. As it stands, being at the top of this distribution and failing multiple times in a row, coming back into this high 80, I would like price to explore a little lower to see if we can get the expansion maybe back down and even under the distribution start to clean up some of this auction before we can get back above and target that 48.25.26 area. So that's what I'm looking at this. We'll see if we get a failure under this high 80. That's the first thing I'm looking for to see if we can get some kind of continuation in this S&P 500 market. So hello, everyone. Good morning, everyone. Hope you all doing well. For Bitcoin, what would be worse? Oh, geez, I don't even trade Bitcoin. I was just commenting on the news. What would be worse for people is most likely seeing a downside move. Realistically, a lot of people are bulled up. So more stops have been accumulated for the long side, suggesting if it drops realistically, I feel like more people are going to be upset about that. Just makes sense based on what's been going on recently. A lot of people swearing to Bitcoin at like 100K, so logically, if we start pulling back amidst this larger run, it's probably going to be more hurtful for traders. With that being said, right, that's my breakdown of the S&P, some ideas, and we will open up our live trading room for our traders, and I'll see you guys tomorrow. Check out TradeProAcademy.com as we get ready for the session. Thank you, everyone, and take care.